Hello all and welcome back. This one is going to be a very important video for Alibaba investors or people who are actually thinking of adding Alibaba to their portfolios or maybe even selling if they already own Alibaba. You may have seen yesterday that Alibaba went down about 6% during the trading day on news that SoftBank, a large holder, a large investor in Alibaba, is potentially thinking or signaling that it may plan to sell its stake, and they have a very large stake too, is what Citi is saying. And the news actually were that Alibaba registered the $1 billion of additional American depository shares, or ADRs as they are called, suggesting to some people that SoftBank may actually intend to sell part of its stake. Now, what's going on here? When people saw this, that the company registered 1 billion additional shares, the first thing that popped into their minds, was that Alibaba is actually diluting investors. They are issuing shares, aren't they? But not really, that's not what's happening. Alibaba is not diluting investors at all. That's a completely different thing that's going on here. And let me point you to this article so that you understand more of what's really going on here. So ADRs is actually a concept that is a trading vehicle. As you see here, they're called American Depository Receipts, and the reason the companies in China, for example, may create these investment vehicles instead of actually selling directly shares is that for companies in China, you cannot really sell ownership of a company, so you kind of have to use a wrap around the company, really, around the company's shares, in order to sell it to an Americanized market. And this is what an ADR really is. It's sort of like an Americanized version of the Hong Kong stock. And currently, Alibaba is selling differently, or as a different ticker symbol in Hong Kong and different in the US. And I'm going to show you a little bit later using our tool what the current prices are and how that works. So this is basically a legal mechanism to allow Americans to trade Alibaba, and also allow them not to waste money during conversions of currency, because the Hong Kong Stock Exchange is using the Hong Kong currency, and people in the US don't want to have to withstand all the currency conversion extra fees and things of that sort. Plus, they may want to get information about the company in English and not just have to get the information that Hong Kong sends for Alibaba. So this is, again, it's almost like a wrap. It is actually a wrap of Alibaba's Hong Kong shares into making them actually Alibaba's US shares, so that they are trading the same way as Tesla, for example, is trading in the US market. That's the whole concept. Now, when you have two assets that are representing, in this case, the same thing, you have a pool. You have two different pools. You have one pool of this asset in Hong Kong and another pool of this asset in the US. The US Stock Exchange, the Hong Kong Stock Exchange. And you may have watched the video that I've made a few months ago in my channel, in which I'm talking about arbitrage, and specifically I'm talking about liquidity pools in cryptocurrency. And I will actually add a link to this video in the description box below. You may want to take a look at that, just to understand how this concept works. But basically, in a few words, what you could do, and actually people are doing it currently, you could actually buy shares in the Hong Kong Stock Exchange and sell them back to the US Stock Exchange, and vice versa, and actually pocket the difference. The difference being the difference between these two pools of stocks, just because they are traded separately. They are different instruments representing the same thing. And so this kind of two pools, these two different pools, they have to be kind of balanced out, right? I mean, you can't have the same instrument, Alibaba, trading at $100 in one stock exchange, and then in the other stock exchange trading for $50, right? This is where arbitrage comes into play, and people are actually doing this selling and buying in order to balance, and actually helps these two pools balance themselves out. But in the process, these arbitrage dealers can actually make money through this conversion. This is a very legal and thing that happens with all cryptocurrency pools. Is a very well-known way of making money, actually, and you can actually do it yourself if you want to. And so you're having two different pools here, and One pool actually requires ADRs, the other pool requires Hong Kong stocks. And obviously the easy one is the Hong Kong stocks one, right? And in order to balance this thing out, because you cannot really have 1 billion of, let's say, 1 billion shares in the Hong Kong stock exchange, and then you have 10 shares in the US stock exchange. That doesn't make sense, right? You have a massive discrepancy there, and thus you can really affect the two pools and the price in one pool over the other. It kind of has to be balanced out. It has to be like 50-50. And again, you can find more about this concept in the video that I have linked below. And so this is what happened here. Alibaba is actually has actually filed for issuing more of these shares, more of these ADR shares, but they are not changing the amount of shares that are currently outstanding. They are just converting some to make them ADRs. And actually, for each Baba ADR traded in the US, that's 8 shares in the Hong Kong Stock Exchange. And this is what happened here. And some people, some analysts saw this as a potential interest for SoftBank to sell shares, because this conversion actually will make it easier for them to get rid of their shares in the US market. That's the whole reason. And so they are speculating, analysts are speculating, this is all speculation, that this thing happened so that the SoftBank can actually sell their shares. And that's how and why, one of the reasons, the main reason, that and some people actually thinking that this is dilution, brought the company's stock down in terms of price. So it's an overreaction which doesn't really make a lot of sense. It's overreaction due to speculation, really, as you can understand. And the final thing that I wanted to show you here is you can see Baba here in the US market. It's currently sitting at $114 over here, and it's before market, it's already at 116.51 right now. And I'm assuming it's gonna go higher very soon. Why? Because if you take a look at Alibaba here, you will see that it's trading. Let me find it over here. Actually, I have to type Alibaba, and you will see this is the ticker symbol for Alibaba in the Hong Kong Stock Exchange. And if you take a look at the price here, it's 115 Hong Kong dollars. I think they are Hong Kong dollars, something of that sort, Hong Kong currency basically, which is, I checked it earlier, 0.13 of those $0.13 actually is one of those HKDs actually is $0.13. And so we can actually use our calculator here. Let me bring it up. So you will see it here. I just brought it up. And we can do 115 and multiply that by 0.13, which is the currency conversion really. And you will see that this is 14.95 US dollars here. So 8 of those make 1 US stock. So if we multiply that by 8 here, you will get 119.6 is the current price in Hong Kong. And so depending on the timing, at some point you will expect that this will balance itself out in terms of the price for Alibaba in the New York Stock Exchange. Again, because of arbitrage. They will have to be at similar values, trading at similar values eventually once the market opens in one place or the market closes in another. It's again all about balancing the prices of the two stock exchanges because of arbitrage people taking advantage of arbitrage really. Arbitrage dealers, sort of. You can think about them, they are traders. So this is what's happening, and this is what happened with SoftBank and the whole situation about Alibaba diluting investors and SoftBank selling a lot of shares and all that. Now, that doesn't mean that SoftBank will never sell shares, or maybe they do intend of selling some shares, but I wanted to explain what the situation is so that you don't really speculate and so that you understand what happened, because it can be a little bit tough to really know what happened there and why the stock went down. It's mostly about speculation, really. And so for new investors, if you ask me, really, I think that this is a massive opportunity again to buy it at a cheaper price, really, because nothing really happened apart from the fact that the company's stock price went down in the US stock exchange. So go figure. So that's what I wanted to point out with this video. Hopefully that helps you a little bit and you watch that till the end, because it's very, very beneficial for potential Alibaba investors, again, or current ones. And if you did enjoy the video and that helped you a little bit, please leave a like. That helps me a lot. And also, if you want to subscribe, I'd love to have you around. You can also join our Discord channel. You can find a link in the description box below. And in the meantime, also take a look at this video that I made a little bit earlier. And it's about Wix, the Shopify's competitor. Very, very interesting one, and a company that you may want to take a look at. Thanks again for watching. I'll see you soon. Have an awesome day. Bye-bye.